Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Hello everybody, welcome to the technical analysis of the Forex market from the ForexPeaceArmy.com. Today the 13th of December, and we continue to talk about the euro currency. Well, although in our research that we have made during the weekend, we suggest that probably market still could show some continuation to the upward, to the higher area of resistance that was in this area, 136, 136.30. That was the confidence resistance of the whole swing to the downside. That hasn't happened, and due to this pattern that we also discussed in our weekly research, that is called the bearish dynamic pressure, that was the warning sign for the bulls and for the probability that market could continue to move higher. Market has shown real solid plunge during the yesterday's trading session. It just has touched the weekly pivot point and continue move to the downside. That is really dynamic pressure, bearish dynamic pressure, that has led to the shifting of the trend to the bearish sign again. You can see that this market has closed below this red line. That is the MACD predictor indicator. It tells us that simple MACD indicator has shown the shifting of the trend to the bearish side and take out of that loss. Well, in general, this price action should not surprise us, since our medium-term forecast is the moving to the 128, 128.50 area due to large ABCD pattern that is forming now on the weekly time frame. Also, if you can see from this pattern, A, B, C top, 618 shallow retracement, 100% retracement, 1618 target stands right here, 128.84, very close to this our weekly target is right here. Well, you can see now that market stands not at oversold, since level of oversold for the today's trading session is 129.69, so it has a lot of room for the continued move to the downside. Well, in the nearest term, market could form such butterfly buy pattern with the 127 extension, 131.52, 1618, 130.44. Well, I suppose that this butterfly has a lot of chances to fail, because real target stands right here as we discussed. Or maybe it will not fail, but will show some just shallow retracement when reaching 1618 extension. I suppose that butterfly will hardly show any retracement at 127, since take note, 127 targets, 131.52. This low stands around 131.64, I suppose, right here. So 127 target stands below that low. You can imagine how much stops have been placed just below that area, and if market will trigger it, probably it will accelerate right down to the 1618 extension. And probably I think that if market even will show some retracement, it will happen right from the 1618 extension target. That's just what probability tells us. Well, still market could show any price action, so if market shows some retracement from that area, well, maybe that could happen, who knows. But probability and market mechanics tells that probably the retracement is more probable from that area, 1618, 130.44. Well, now you can see that market has stopped a bit and hasn't quite reached that low, and it stopped not just by hitting with that target, but some intraday reasons that we will discuss now. Overall conclusion from the daily time frame is that we should use any retracement to the upside for the possible continuation to the downward move to possess ourselves on the bearish side of the market, since weekly, monthly and now a daily environment and trend that is confirmed by this really solid candles to the downside, acceleration to the downside, tells us that probably market has more chances to continue move to the downside rather than reverse to the upside. On the 4-hour time frame, what we see, that is the left wing of the butterfly that we have discussed on the daily time frame. I just decide to unload a bit this chart. That's the lines that will not mess us the overall picture. Currently, what we see, 4-hour trend is bearish also. So since market not at oversold, and as daily as 4-hour time frame is bearish, we need to use nearest Fibonacci resistance area to possible position ourselves on the short side of the market. The nearest level on the 4-hour time frame is 134.61. So right here, 3-8 resistance from the swing to the downside. Just a bit higher, you can see that classical resistance area that is made by this support, breakout. Now it will be act as resistance. And slightly higher stands 4-hour confluence resistance, 133.13, 133.16. Also take a look that trend will remain bearish on the 4-hour time frame right to that area, 133.27. So if market will break that area and continue move to the upside, then we could count on the further continuation to the upside in the nearest term, since shifting of the trend on the bullish side on the 4-hour time frame will suggest that market could show some deeper retracement. But current environment and current price action during the previous trading session and now tells us that the probability of this event is very shallow. I think that there are just few odds that market will break that area. Probably this retracement could stop here or here. Besides, take note that this consolidation right above the previous lows, it's very important, very significant. So this could lead to some really tricky price action, because this environment will trap as breakout traders, as those who intend to enter on the short side of the market. So be careful in such areas as the nearest lows, previous lows. Now, on the hourly time frame, we see that trend currently is bullish. I do not have the missity, but you could take a look by yourself on that. Take a look why this consolidation now is happening. Because of that butterfly buy pattern. Okay, that was our previous analysis. We said that taking account of this pattern A, B, C bottom, trend was bullish right here. We said that market could continue slightly higher, and later you can see that market not even proceed to the 618 target that was around 134.25 as we said, but then close below the weekly pivot point and accelerates lower. So in that area, market has taken out that low and erased our ABCD forecast. So in that moment, you have to close position, long position if you have one, okay, based on this pattern, because by that close below that low, market has erased C point of that ABCD pattern, and so totally erased that possibility to continue move to the upside. Also in that area, hourly trend has turned bearish, so that's no context on the short term to enter on the long side of the market. It was ideal if you have reversed that position in that area, but this is rare view mirror discussion. Let's take a look what is happening now. So market has hit 1618 target of this butterfly buy, 131.95. And now what we see? The nice double repo buy pattern on the hourly time frame. Close above the 3x3, close below, close above again. Okay, that's confirmation bar. Market now shows some retracement. Well, probably this retracement could stop even here or here, because this is intraday pattern. Market has not hit any significant daily targets, so that's just consolidation based on that butterfly. Okay, that is our crucial level on the 4-hour time frame. That will be that could tell us should we expect some deeper retracement, or market will continue move to the downside. So that is the levels where market could stop its retracement to the upside and reverse to the downside again, since it stands slightly above the daily target of the butterfly and the previous lows. It's very significant. So that is the first area that has been hit already, 132.19. The next area, it's a bit wide for the confluence resistance on the hourly time frame, but still we could treat it as the confluence resistance, 132.46, 132.61. So right here. So very probable that market could stop in that area and reverse to the downside. The next area is our 4-hour time frame target, 133.13, 133.18. Not the target, sorry, it's confluence resistance. You remember that 4-hour time frame will hold bearish right to that area. So that's a significant area for the nearest of the couple trading sessions. Well, logical bearish environment will be if market will stop here or here and reverse to the downside, will accelerate lower and take out the daily low at that area. It's 131.64, I suppose. Well, this will be absolutely logical, and then accelerate further to the 1618 extension of the butterfly, because there are no barriers, no support areas except that extensions that could prevent market from that price action. Also take a look at that acceleration to the downside. This is really strong. So all trends are bearish now, and I suppose that this retracement probably will be shallow. It hardly will reach that area, but this is just a discussion of the logical and some, if you could say, pure bearish scenario. What could happen with reality, it's very difficult to predict, but keep in mind that if market will take out that resistance area, you should wait for the deeper retracement, deeper move to the upside.